You have talked and written about what you call the spring theory. Would you like to explain that? Is that still relevant, more relevant perhaps in today's time?
Yeah, what I've seen is that when equity values depreciate, a lot of our clients tend to think that, let's say if 100 rupees becomes 80, a lot of investors think that if 100 is 80, that's like one out of five of our possessions or physical objects, which is lost. So typically, if it's a physical object you're counting and one out of five disappears, you lost 20%, and that's probably not coming back. But that's not the correct visualization when you're dealing in equities. In equities, the correct visualization is that if you take a spring, which is 5 centimeters in size, and if you compress it by 20%, it becomes 4 centimeters. But that 1 centimeter doesn't get lost. In fact, that 1 centimeter actually compression means that the spring is now more valuable. It stores more energy. And when you actually release, when it recoils, it's going to go back and recoup the whole thing. So what happens is that, and the other thing is there are a lot of arithmetical confusions that people have. So what people think is that when 100 becomes 80, it's down 20%. Now, oh my God, to get back to 100, it's not 20, I need 25%. Now, see, these are the kind of visualizations which scare people. That's why I said the correct visualization of spring. If you compress a spring by 20%, it will recoil 25%. It doesn't recoil 20%. So a lot of times what I've seen is that how you visualize things will determine how you respond. More importantly, it's responding, it's not reacting. That's why I think correct visualizations are important. And equities which are, even as companies are surviving and they have a long-term future, when equity prices fall, they tend to store more value. That's how I would put it.
Always a pleasure talking to you, Aashish Somaiyaa. Thank you very much for joining us here on the Money Mile, and wish you good luck, stay safe, and all the very best.
Thank you for having me. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.